So collectively across the board today, we saw the US markets more or less be clobbered. You can see in the top right-hand corner of my screen, the Dow Jones Industrial Average closing down 234 points. If I continue this into the S&P 500, we closed down 18.7, and that of the Nasdaq down very close to 60 points respectively. Now, a lot of people have been concerned about today's sell-side volume. Yes, it is a little bit elevated, but continuing on with a little bit of the analysis, the structural sort of composition of this market, it hasn't been jeopardized, nor has it been sort of fractured in any format. What we are still doing essentially, really since basing during the month of August, is that we are still establishing a series of higher lows and also higher highs. The textbook definition of the macro trend advance is still in effect. It is still in play, and this is essentially what we call turbulence. Also, one other thing that I want to add in relation to the Nasdaq and that of the S&P 500 is that during Tuesday's trading session, it was looking a lot more ugly than how we eventually closed the day's worth of trading. You can see that we pushed off from the respective intraday lows. We have these long lower wicks which have set up on the daily time frame. Again, this is showing the resilience of buyers to come back in and to support the market, albeit during that of a bearish day. If I continue into the S&P 500, you can see that long lower wick, which once again has developed on Tuesday's candle. Now, people have also emailed in and they've said, hey, look, is this what we call an evening star reversal 3-day pattern? And you know what? It is very close to it. However, if it was going to be that of a textbook 3-day reversal pattern, we would have expected Thursday's candle to be that of a long day white Morobozu to give us, of course, the full pattern, the 3-day reversal pattern. And that simply isn't the case. On Thursday, we're left with another spinning top candle. So again, we're getting a little bit creative, or those who are emailing in are a little bit too creative in their analysis of the candlestick patterns. Yes, I commend you for actually, thinking like this. But again, it's getting a little bit too aggressive based off just simply one day's worth of sell side activity. Now, again, just to confirm and really just to make this as concrete as possible, we haven't done any structural damage. When I use the term structural damage, essentially what I'm saying is that, look, we are still macro and intermediate and also on the minor level bullish until, of course, we fracture below this green box on my screen. So you can see on the Dow Jones Industrial Average, yes, we have moved back towards that level, but we're still printing up these series of even minor level higher lows as well. So, I mean, this may be potentially the low that we are basing or putting in for this current week. Now, it is a shortened trading week. Yes, on Monday, it was the Labor Day public holiday. So looking forward towards the end of the first week's worth of trading for September, we only have 3 more trading sessions to really deal with. And again, at this particular point, all that we can truly concede at the moment is that yes, it was a relatively bearish day. However, again, we're getting mixed signals. The market is still relatively bifurcated, and if anything, it looks as though we're getting a very short-term backtest of about this 2,450 pivot on the S&P 500, and also on the Nasdaq, we got very close to this pivot at 6,325. It's going to be very interesting to see how Wednesday, Thursday, and Friday sort of occurs and what happens in terms of price action. It wouldn't really, surprise me to see sort of continued volatility around this area. But what I assume is still going to happen is that there's a very high probability that collectively across the board, we may still rally and push on back up once again to retest some of these respective resistance areas. Now, if I take this discussion, or at least, what I've been speaking about so far, a little bit further, it is interesting to note, and at this point only to note, is that on the Dow Jones Industrial Average, we've now got the third subsequent lower high on the minor level of this trend. So it was looking as though we were breaking above this very short-term aggressive little bearish trend line. We broke above that over the past week's worth of trading, but then again, to start this week on Tuesday, it looks as though we are essentially back testing these, or at least this broken trend line. Now, again, I don't place all that much importance in this trend line. It was acting relatively nicely up until last week, but again, made that very clear over the weeks and past weeks worth of pro that, look, it's not all that important. It's not all that concerning. We're probably going to break above it, then break back down, retest it, do all sorts of things around it. What's most important about this market is the overall structure. Now, again, if I change to the S&P 500, you can see for yourself that even during this most recent advance over the past week or so, we have now once again established a subsequent lower high to where we were earlier in the month of August and towards the end of July. If you pay attention to the bottom levels on my screen over here, the same is true for the Nasdaq. We got up very close to the all-time high. We didn't actually overcome it. It looks as though we're trying to retest this resistance area. I'm unsure at this particular time if this is going to be the only retest of this resistance area. Personally, I don't think it is, but time will tell as we progress during this week and most likely during the following week's worth of trading. Now, What I wanted to do also was to touch on that of the Russell 2000 and the transportational average as well, because if your focus is really sort of positioned on these more so three widely followed markets, it's very important that you also pay attention to the Russell. It's something that I speak about a lot, and also that of the transportational average. They are more or less as important as each other. But what is going on right now is relatively interesting. What we have done in the past is that when we get into these types of market scenarios, more or less when we move into consolidational phases, and even if we catch on back up and retest some of these old primary bullish trend levels, which is exactly what we have done on the Russell 2000, we need to pay very close attention to price action, because before we got the retest of this decelerating fan line, the bullish trend line, we had a little whipsaw breakout to the top, right, to the bullish or in the bullish direction. Since then, we've sold off, we've retested, again, this decelerating fan line, we've bounced, we've rallied. We haven't seen any dark candlesticks materialize over about the past 3 weeks worth of trading activity until, of course, today's trading session. Now, again, it comes on relatively elevated volume or an elevated volume reading. What we are also left with is more or less an engulfing type of candle as well. So this is in the red box. The red box resembles that of resistance. And again, this is a potential sort of, bearish construction which is underway for that of the Russell 2000. I'm not going to go out on a limb at the moment and call that this is going to be another sort of sell-off wave from this area. But if we continue to see bearish candlesticks develop around this area, well, then it puts at risk more so the macro picture and also the intermediate picture. But having said this, it will be a rather slow process, and one candlestick isn't really enough for us to come to sort of definitive outlooks based on the macro and also intermediate trend. Now, if I extend this sort of discussion into the transportational average, surprise, surprise, last week we were left with that of sort of a shooting star candlestick, very close to that of a gravestone doji. You can see very similarly over here throughout the mid point of August. But again, what we've essentially done is we've created maybe potentially even the fourth consecutive lower high. And again, if you go into the lower lows, you can see also we've got this little minor level pattern establishing itself on the transportational average. Now, again, more so into the earlier months of July, you can see we had this breakout pivot over here. We retraced, it confirmed once we broke below this macro green box. And since then, we've sort of fizzled out down here around 9,087. We've got the subsequent bounce. But look at what's happening. We've sort of retraced back into this red box. We've got an elevated sell side volume reading. And this is in conjunction with this little shooting star candlestick, which sort of rounded out the week just gone. So we do have some relatively bearish signals. If I start bringing up some of these oscillators and things like that, it starts to really sort of bifurcate the picture, because again, these oscillators are relatively bullish. I mean, the RSI is slowly adjusting from overbought, but again, it is still above the midpoint, above 50. The stochastics is bullish. The MACD is still bullish, but price action, the structure of price action is a little bit more developed than that on the Nasdaq, the industrial average, and the S&P 500. It looks as though this is a little bit, forward-looking, so to speak, and that's really been how we've sort of used these markets as a gauge of where we believe the more closely followed markets are going to move into the future as well. So pay attention to that of the transportational average and also the Russell 2000. If we continue to see these two respective markets break down, well, then it does usher in some sort of rain clouds or dark clouds on the horizon, so to speak, of where price action is most likely going to go for the industrials, for the S&P, and for the Nasdaq. But at the moment, just to reiterate, we still haven't made any structural breakdown. There's nothing to be concerned about. I'm not saying that obviously that can't change. Of course it can, but again, if you're jumping to to conclusions that this is the beginning of a major sell-off, it is too premature. We have to see certain things sort of unfold until it sort of opens the doorway to larger sell side volume and, of course, more direction and momentum to the downside. So we'll monitor this on Wednesday, we'll monitor this on Thursday and also Friday. And again, it's going to be very interesting to see how these markets close the week. At the moment, it hasn't been the most bullish beginning to a week of trading that we've seen, okay? So on that note, anyone and everyone, if you have any questions, email me success@pivotpoint-trading.com. Enjoy your evening, enjoy your Wednesday, and I'll be back with you in due course. All the best, everyone. It's James signing off on behalf of Pivot Point Trading. Goodbye.